There we go.
All right. Welcome all to the Node. I am Mike, aka Veteran Crypto, and with me, as always, is David from DeFi University and also the Node. How's it going, brother?
Outstanding, Mike. I'm looking forward to it today, man. This is going to be a great call with Shaul, man. I can't wait to speak to him.
Oh, dude, I've actually really been looking forward to this. I enjoyed the interview that that Drew and I did a while back, but with your knowledge in DeFi, I really think that you're going to be able to peel back more layers and ask, not better questions, but more pointed questions, and to really help people understand, what Canton is, because it's such a different project than a lot of them out there, and there's a lot of misinformation about it and misunderstandings about it as well. And it's not malicious; it's so different. I mean, you really have to become a subject matter expert on it, and I know that it's something that you're very passionate about, is digging into these projects.
Yeah, man, it really is. And I put together a bunch of learning resources just so that I could, get to know who Shaul is a little bit before speaking with him so that I don't come off like an idiot. It's like, gotta know who he is, right? He's got an
Yeah.
amazing background, man. I had
Yes, he
no
does.
idea. He really does. You know, uh, Lib Snark, which is like the foundational library for ZK
Yep.
Snarks.
Yep.
Bro, just amazing background. So I'm really looking forward to speaking with him today, man. I can't wait.
Yeah. No, I was actually really impressed with him from the get go, just because he was actually willing to come on DeFi crypto and airdrops before we rebranded to the Node, and it was purely just because he's a military veteran as well. And I asked him, and he looked at my profile, I guess, and was like, "Hey, yeah, no, fellow veteran, happy to come on." Just really good, very genuine dude. So yeah, I very much enjoy chatting with him. But well, let's go ahead and jump into what the hell? What just happened?
A little bit of
Where did
news,
it go?
maybe.
Where did it go? Yeah, I was going to do the news, but hold on. What's going on here? All right, let's do this. All
There
right,
we go.
we're to go back to the old school. All right, here we go. So first and foremost, if you want to follow us, we're basically rebranded to the Node. We're working very diligently to bring you news, interviews, very good quality interviews with some of these different projects, and education. So a big part of rebranding to the Node is David and DeFi Don coming on board and bringing DeFi University, a very very comprehensive entry level to advanced strategies, learning DeFi, structured, walks you through, each lesson builds on the last, quizzes, all of it is very very professionally put together. I I'm kind of biased, but I feel it's one of the best programs out there for people to go through. But if you want to follow us on YouTube, come on over here. If you want to join the conversation, if you want to ask anybody that we're interviewing questions, we're more than happy to field those. But at the Node_channel, and that's where you can find this show from 9 a.m. to 11 a.m. Pacific, noon to 2 Eastern, 2 hours where we just talk about, again, news, interviews, and education. Crypto and Chill on Tuesdays and Fridays at 5 p.m. Pacific. That's myself and Jeff, where we just relax, decompress, sprinkle in some crypto talk, and just kind of shoot the shit. We got the Blockchain Report with Jeff Monday, Wednesday, and Thursday, directly after DeFi High with DeFi Don. and that's where Jeff goes into early projects and farming airdrops. DeFi High with DeFi Don, it is all entry level beginner DeFi education. And he also sprinkles in, he's a very successful business owner. And so he sprinkles in, a little bit about helping people that might be aspiring business owners on how to get started, and some of the pitfalls, for people that are trying to get started in that. Spoke with Drew this morning about sovereign soil. Myself and him are going to start knocking something out probably Fridays or maybe the weekend, just doing a 30-minute show. He's a homesteader. I'm a homesteader into emergency prep. And we're just going to start sharing our knowledge and experience, with everybody out there. And all these shows, no charge. I mean, we enjoy teaching people. We enjoy helping people become more self-sovereign, both financially and, in their lifestyle, their food, their water, shelter, all those things. David does a daily market wrap up at 1 p.m. Pacific. So, at the end of the markets Eastern time, where he just wraps up what went on that day. So we talk about the beginning, we talk about the end, and just give you the full picture. Saturday nights, Jeff is a DJ, and he likes to spin music. And so if you want to hang out with him, and he's actually just got doing an interview with DJ Superman. And so, yeah, they're going to be doing tutorials, and if it's something that you're interested in. Red Pill tonight, if you want to join us, is 6 p.m. Pacific, 9 p.m. Eastern. It's where basically a bunch of us get drunk and talk shit and talk about all the stuff you're not supposed to talk about. So, and Ellie and Jay, two of our community members, have started a channel where, and I joined them last night, and we just play Arc Raiders. Just talk smack and play Arc Raiders and different video games. Just fun. So that's basically our network of channels right now. We got quite a bit going on. If you want to come here to X, you can follow us here at the Node channel, all one word. And last but definitely not least, our website, our official homepage that David's been working on. And this is where you can find all the links to the news that we talk about on the show. You can watch us live. You can join the chat. You can find links to DeFi University if you want to go through that course. Again, absolutely no charge to you. It's the best deal you're going to find out there. David's private coaching, if you want to accelerate your education and getting into DeFi, it is a paid service, but it's very much worth it. And he's actually chosen somebody out of our community, Ellie in the chat. She is going to be going live with him, I believe Tuesdays and Thursdays, was it?
Yeah, Tuesdays and Thursdays. So let's see here. It's going to be Tuesdays and Thursdays. If I hop into my schedule at 4:15 p.m. Eastern Standard Time. So what I'm going to do is I'm going to walk Ellie through as if she was starting from zero. And we're going to begin with security best practices. We're going to set up a hot wallet. We're going to talk through the difference between hot and cold wallets. We're going to talk through security hygiene when operating in DeFi. I'm going to send her 100 USDC and a little bit of ETH on the base chain. And over the next 8 weeks, we're going to operate on base, and Ellie's going to build a DeFi skill set. So we're going to start with wallets, and then we're going to move on to swapping. Probably begin on Uniswap, on Aerodrome, maybe a couple of other dexes, and then we're going to move on to money markets. Ellie's going to learn how to lend and borrow, the things to watch out for and the things to do. And then we're going to move on from money markets probably to liquidity provision dexes, and then we'll take a look at perps dexes, and then maybe we'll take a look at some interest rate arbitrage stuff or some statistical arbitrage stuff. And so I know that for Ellie listening right now, she's probably thinking to herself, oh man, I don't know what the hell interest rate arb is. Well, like, here's the thing, man. Here's the thing. You learn by doing, and it might seem overwhelming right now. It's kind of supposed to be, like you have to reach just a little bit every single day, just a little bit outside of your comfort zone. And then over the course of weeks, all of a sudden you build a skill set. And then there's this moment where you have this light bulb this light bulb goes off and you're like, oh my goodness, I understand this now. And so we're all going to be able to see Ellie have that light bulb moment right there live. So it's going to be great, man. It's going to be really great. I'm looking forward to it.
No, absolutely, and I think it's great that one, she's been like such a great, her, Jay, Nick, a bunch of people in our chat, like Joseph. They've all been such great supporters of the channel, especially through this bear market and stuck with us. So it's I think it's cool that we're able to kind of show our appreciation, for them sticking with us. So. Well, where was I? Okay, that's the private coaching. And then this is sexy. If you haven't seen this right now, you can basically create an account and at no charge, you can use our automated newsletter. So a lot of newsletters out there, they choose the assets, they choose what information. This is fully automated. You can come on here, you can pick the stocks, the commodities, the crypto that you're interested in. If you know the ticker, you can put it in here, and you can generate your own newsletter at any time of day or night. And it's going to give you up-to-date trading ranges, liquidity pool ranges, so the lines of resistance and support, so that you can pick your liquidity pool ranges. It's going to give you news with links. It's going to give you social media posts off X and links to those, just with trending topics and news and things like that. So it is a fully customizable newsletter for you that you are in full control of. This is something I have not seen out there yet. So again, right now, jump on, test it out. But here, because I believe probably next week, once David finishes dialing in the site, it's going to be $20 a month. So it's give it a test for a week. What's that? Once David,
it's playing in the background. So one thing, Mike, did you see what I shared in Slack last night? The architecture for Bob in accounting, our AI CFO, dude. That is so basically all I need to do now, since I've built the architecture, I've built it all out. All I need to do is the time-consuming part, which is getting all the keys, dude. Can you guess how many keys our AI Clawbot CFO needs?
No.
18, dude. Needs 18 keys. So that's going to be quite time consuming, going to Plaid and Coinbase and Strike and Stripe and Shopify and EtherFi and Google Cloud and Telegram and Slack, getting all the keys to be able to wire it up properly. But dude, it's going to be amazing when it's done, because we're going to have real-time reconciliation, or at least daily reconciliation. And so we're going to get reports every morning at 5 a.m. Pacific, and we're going to get reports every week on Friday, and we're going to get reports every month. And so what I've built is a replacement for a human CFO, except better, which is amazing, dude.
Oh, no, absolutely. And just so everyone knows, the first part of the show is we're about to go into the news. Shaul will be joining us for the second hour. So stick around for the news. If you want to go and get a coffee or something like that, and hang out with us, great. But he'll be here in about 45 minutes. So last but not least is the Node Store. So DeFi Don has been working on the designs for hoodies, hats, all that kind of stuff. And that stuff, as of last night, I saw that they posted that they're starting to add that to the store. They're not available yet, but he's starting to put some of that stuff in here. So it's all starting to come together. So
it is, and the merch looks great, dude. So I'm gonna be the first person to buy one of these hats, because I have a hat thing. I like buying all sorts of different hats. But DeFi Don, man, he put together all of our merch last night, and it looks really good.
Yeah, no, and for me, a hat or a beanie is a must. Like I said, if I don't wear this, then the glare will blind out the camera. So I got to cover my solar panel. All right, so let's jump into some news, and I want to start with this because I found this very interesting. Let me share this. So this Carlo, A crypto and criminal defense lawyer, a former law professor, and founder of stablecoinsolutions.io, building Genius Act compliant stables. Just very knowledgeable dude. I've actually watched him on some interviews before. But this is the best take. If you haven't been paying attention on X this morning, there is a lot of talk and people beating up Brian Armstrong about basically Coinbase not supporting the bill as written, as far as us not being able to earn yield on our stable coins. And oddly enough, I see a lot of people going after him for not supporting it, which boggles my mind. But this is the best take that I've heard on it. This debate is frankly becoming ridiculous. The Congress needs to step in and take back control over the passage of the Clarity Act. Banks want to ban passive yield because it gives consumers an alternative place to hold their digital dollars and get paid 4% yield, as opposed to the average 0.07% that the banks offer. Coinbase wants to allow passive stablecoin yield because it preserves their profit margin, and their arrangement with Circle concerning incentives to custody customer USDC on Coinbase. Neither side is obviously willing to budge. Congress therefore needs to step in. So let me break it down. Let consumers have choices about what and where they can earn on their stablecoins. Option 1, if Circle wants to continue paying out a large share of their return on stablecoin treasury reserve assets to Coinbase, so Coinbase can in turn pay 4% yield to customers as an incentive to mint and hold USDC on Coinbase, that's a business decision, and Circle and Coinbase and a genuine alternative to banks for consumers. Option 2, if banks refuse to share more of the profits they make on fees and lending out customer money in order to pay customers higher interest on deposits, that's also a business decision for the banks. And it also allows consumers to choose where they want to custody their digital dollars. Competition is good. Monopolies are bad. Competition lets the consumer and the market decide. A monopoly limits free markets and leaves the consumer with no options. I could not agree more.
Yeah. So, Mike, I want to share something real quick. I've got, I've got a course here up from DeFi University. It's actually the very first course in DeFi University. And it's one of the first lessons in the first course. And this is all about the fees that banks charge. Okay. So this is the fee menu, right? There's actually
Don just went through this lesson. If anybody wants to watch it, they can go on the channel.
Yeah, he just went through this lesson, man. And when we take a look at this fee menu, all of the different fees that these banks charge.
Overdraft fee, maintenance fee, open an account fee, you're closing your account fee, using an out of network ATM fee, plus an ATM fee. So you get double feed for using an ATM.
It's crazy, man. And this is their entire business model. Their business model is friction and theft, basically. These fees, I think they're theft, man. So, monthly maintenance fee just to keep your account open, an overdraft fee, and here's the thing, man, a lot of those authorizations that you're not really signing them in the same way that, when you go to operate in DeFi and you want to execute a swap transaction, first you have to, approve a spending cap. When you take your Visa card and you put that into a subscription service like Netflix, you're doing something very similar. You're authorizing Visa to withdraw money either from your checking account or from your credit card. But let's just use the checking account example here. When you take that credit card or you take that debit card and you give it to Netflix and you authorize them to every single month deduct a certain amount of money from your account, that authorization, it can be really difficult to cancel those authorizations. And, if you don't, and all of a sudden you've got, let's say, $5 in your checking account. I don't keep any money in bank accounts. I'm 100% in DeFi. But, if I've got a $10 charge and I've got $5 in the account, and all of a sudden I've got a $25 or $30 overdraft fee, what type of nonsense is that, man? And you know how much money these banks make on these overdraft fees each year? It's in the I think it's like $15 billion a year just in
It,
overdraft
it's
fees.
it's the largest part of their business model. It's where they
It's
make the most money.
it's horrible, man. And then the ATM fees and wire transfer fees, and then charging you a fee to close your account, charging you a minimum balance fee. Oh,
Yeah.
do you want a paper statement? Okay, that's going to be $2 to $5 a month. Oh, are you
Yeah,
not going to use the account? Okay,
dude.
that's a like what?
DeFi Don, I mean, as you know, he's a very successful business owner, and they actually contacted him and said they are no longer responsible for fraud on his account. So he had to pay an extra fee each month to where they would send him emails so that he could view and authorize transactions before they went through. And so basically, they found another way to charge a fee and not be responsible for fraudulent charges.
Yeah, and you know what? It's such a shame because now in 2026, we have superior alternatives to this.
Yes.
Like, you don't have to live this way anymore. Like, you just don't.
Yeah.
You can, operate in crypto and DeFi. You can become bankless. You can become sovereign, and you can remove yourself from these traditional bank accounts and not have to worry about all of these ridiculous fees. But what's going on right now in Congress, that is just it's really, really shameful that our Congress people are not representing us and instead seem to be representing big banks.
Yeah.
And we should have the choice of being able to either use a basically like a digital asset account, which is kind of what Coinbase is pushing for, kind of sort of. And if people want to continue using their filthy, filthy fiat in tradfi accounts, well, then go ahead. You can. It's up to you, but it should
Well,
be up to the
what it boils
individual.
down to, but what it boils down to is we are operating under crony capitalism. The banks are getting preferential treatment as opposed to true capitalism that the strong survive. Like the gentleman that I just read his post. He's saying let the banks offer whatever services that they want to offer. Let Coinbase offer whatever services they want to offer, and let the market and the people decide. And whichever is the healthier model, because you have banks that are getting government bailouts, which is basically our tax dollars. So they're getting us on fees. They're borrowing out our money, lending out our money to make money off of. And then now they have a monopoly. So and they don't pay us anything for using our money. So if Coinbase and Circle, if they figured out a way to make it mutually beneficial for both us and them, I say let that be the new model.
Well, Mike, think about how backwards this is. Okay, so this is the argument that's being made. Traditional banks, they're lobbying heavily for a prohibition on this stablecoin interest
Yeah,
and passive rewards, because here's the bank's argument. All right, they're arguing that
you
if
got a ghost. You got Dom the ghost behind you.
oh, yeah. So check it out. They're arguing that if crypto platforms can offer 4% yield, we're talking about 4% yield, man, nothing. But the argument is that if crypto platforms like Coinbase can offer 4% yield on dollar pegged assets, while the banks themselves offer significantly less, if anything at all, it could trigger a massive, quote unquote, deposit flight from the traditional financial system. So it's just such a backwards way of thinking about it because you've got this disruptive, superior product that comes out, these stablecoin products, and consumers could benefit massively from adopting these products. But our own Congress people are actually working against us and for the banks to protect the bottom line of these massive financial institutions that were the recipients of what was it, greater than $1 trillion in 2008,
Bailouts.
multiple bailouts, huge taxpayer
Well,
funded
and
bailouts.
one thing that people don't
Just crazy.
understand is after 2008, our representatives actually passed legislation that it allows what's called a bank bail-in. which
Oh,
basically
dude.
basically they can seize our assets. They can seize our money that's in the bank if they are in danger of going under. So they don't just get bailouts, with our tax dollars now. They can actually take your money that's in the bank if they're, basically going to be insolvent.
The last time I heard about a bail in was with all those Cypriot banks in Cyprus. Um, so it's essentially the opposite of a bailout, right? So a bailout uses external taxpayer money to rescue a bank, whereas a bail-in forces the bank's own creditors, including depositors, and you're going to love this, Mike, to take a quote unquote haircut. Okay. They call it a haircut. Well, what happens when the haircut is 90%? That's more like you're chopping off your own head, man.
Yeah.
It's crazy. And so this is what happened in 2013, okay, in Cyprus. And the Cypriot banking sector then was 8 times the size of the country's entire economy. And so when these banks collapsed due to heavy exposure to bad Greek debt at the time, if you remember the pigs, Portugal, Ireland, Greece, and Spain,
Yeah.
they were at the time, having a lot of problems with the EU. They needed rescuing. And so these Cypriot banks, they were holding all this, Greek exposure, and they forced.
Germany stepped in.
Yeah, but they those banks in Cyprus, they forced their clients, their customers, to take a haircut. Okay, so if we just take a look at this here, I can't believe that type of thing is coming around to America, man. Um, just horrible, horrible, and we
Well,
should.
we got a couple more minutes, but it's like for the last 30 minutes before Shaul shows up, I want to hit some of these headlines. But yeah, go ahead and wrap this up, and then
Yeah,
we'll move on.
let's take a look at some headlines. We don't need to talk about Cypriot banks in 2013 anymore.
Oh, yeah, like I said, to me it's interesting, so I didn't mind diving into it a little bit. But so I think that everybody's beat oil up to death. It looks like gold experienced a dead cat bounce at about 44.28 after hitting an all-time high in January. Gold has faced a sharp correction. Analysts warn of a bearish trend if it stays below the 46.20 resistance level. What are you seeing what they're seeing?
Yeah, so take a look, Mike. I've got my charts up here. We can take a look through just real quick. So crude oil continues to be the flashpoint globally, and on the back of President Trump's comments earlier this week, we did get a pretty decent sized move to the downside. And if you notice, this is a pretty big bearish engulfing candle. So bearish engulfing candles tend to be short-term continuation candlestick patterns. And that's simply defined as a candle where the body, and you can see that here, here's the body on Monday from, here's the open and here's the close of that candle. And that day's candle engulfs the price action for several previous days candle bodies. Okay. So this is referred to as a bearish engulfing. And usually you get some continuation to the downside. We didn't get that. And so we're actually pushing higher. So with crude at $94, you should expect that rates will continue to push higher because energy is a massive input into just about everything. And so if energy has doubled, well, then we should expect inflation break-evens to move higher also. That means rates up, rates up. And so if rates push higher, as we should expect them to, because, hey, all those producers in the Middle East and that Strait of Hormuz, number one, the strait seems to be effectively closed. And number two, those producers are shut in. And so that should continue to put upward pressure on crude, which means upward pressure on rates. That's what that means. What does that mean for the dollar? Likely means, yeah.
Something else that has to do with oil that isn't talked about a lot is the longer this draws out, the more wells that they shut down because they don't have anywhere to store the oil. They're going to have to start shutting down wells. It takes quite a bit of time to get those back up and producing again. So there's going to be a lag, even after that strait gets reopened.
Right, right. And, I'm just thinking to myself, what is it going to take in order to remove the Iranian threat to
Mhm.
shipping there in the Strait of Hormuz? What is it going to take? Um, and it seems as though, an option that could be on the table is using American boots on the ground to secure those islands and essentially secure the strait. Um, but I certainly hope not. We shall see what ends up happening. All I do know is that crude oil likely has more upside ahead, especially if we get to Saturday and there's no real negotiation going on. So, although President Trump seems to want a speedy end to this war, it seems as though the other side does not. And so they're going to have to look. They're fucking around. They're going to have to find out, man. It's this is an opportunity for the world to rid itself of a terrorist regime, and so we've got
Oh,
to take it. We've got to take it.
they, they did raise the enlistment age. Like you can be 42 years old now and enlist in the military for the first time.
I mean, that gives me a couple of years, Mike. I
Well,
can make it.
as a well, yeah, but as a former military recruiter, that usually means that their recruiting numbers are hurting really bad. When they start making big changes like that, it means they're hurting for people, or they're expecting that they're going to need a surge of people in the near future. So
Well,
do with that
we
as you
shall see. We shall see. All I do know is that crude oil is likely to see further upside. If we have more upside in energy, we probably have more upside in rates. If rates continue to push higher, I would expect that to be bullish for the dollar. So I'm looking for the dollar to really break out above that high that it put in on Friday, March 13th at, what was that high? Right around 100.5. So a breakout on the dollar, I think that would be pretty bearish for equities and more than likely very bearish for digital assets.
Mhm.
So my expectation here for Bitcoin is that we see this bear flag pattern complete. And that brings BTC down into my buy region, which is between 32K and 48K. So this bear market, I want to be a buyer of BTC down in this green zone.
Keep
Um,
your powder dry.
yeah, you got to be patient. Got to be patient. And when I think about stocks here a little bit, the S&P is definitely rolling over, no doubt about that. And if we throw down this 200-day moving average, not only have we broken below it, but it looks as though we're likely going to close below it again today. Take a look at the Nasdaq below the 200-day moving average, likely going to close below the 200-day today. Take a look at the Russell. The Russell is the outlier, trading above the 200-day, having bounced off the 200-day twice. So continue to watch the Russell, but notice this trend line, which was support. When it broke, it has flipped and it became resistance. So if the Russell makes it down below that 200-day moving average, I bet that would coincide with further downside out of digital assets. Russell 2000 items tend to be a little bit more interest rate sensitive, and so do digital assets. If we take a look at the vol, take a look at VIX real quick. So volatility futures continuing to push higher. And take a look at this. This is referred to as an expanding volatility regime. Okay. This is not the good type of regime. This is a bad regime. And
Bad.
yeah. So lots of action in markets.
All right. Well, let's do some crypto and DeFi. We got about 25 minutes before Shaul shows up. So Fannie Mae. So those that don't know what Fannie Mae is, like Fannie Mae, Freddie Mac, housing, government organizations to accept crypto-backed mortgages in a historic shift for U.S. housing finance. The mortgage giant will now allow borrowers to pledge Bitcoin and other digital assets. Are you tracking this, David?
Yeah, so I think that's like as of right now today. That is, fresh off the presses type news, man.
Yeah.
So it looks as though it's going to be a pledge don't sell model. So essentially, you're putting up your Bitcoin as collateral
Mhm.
for, or USDC as collateral for your down payment. And since you're not selling that digital asset, it doesn't trigger a taxable event. So there's no capital gains event, which is, really, really good.
That's
Um,
awesome.
right. And it says the mortgage itself is structured as a standard Fannie Mae backed loan, which typically offers lower interest rates than private niche crypto loans. And it looks like they're going to have a two loan structure. So at closing, you essentially take out two loans, the primary mortgage and a secondary loan secured by your crypto to cover the down payment. Both are combined into a single monthly payment. Wow, this is really cool. So,
Dude,
um,
dude, check this out. Did you
yeah,
see this? It's involves Coinbase. The borrower needs to have a Coinbase account, and once the cryptocurrency is put up as collateral, it can't be traded. So this is another thing, thing where Coinbase is involved with it, and potentially Morpho, because Morpho is the protocol that is behind most, if not all, of the borrowing and lending that is occurring on Coinbase.
I mean, this looks to me, Mike, like something that I might want to do here in South Florida, because if I put up a couple BTC as collateral, take a
Mhm.
look at this. There's no margin call. So, if I were to, let's say, hop on over to a money market like Aave and put up, 10 WBTC as collateral, right?
Mhm.
That would be, let's call it $680,000. If I borrow USDC against that, and then the value of my collateral drops
You
below
get
the liquidation threshold, I
yeah.
get liquidated. But for this type of Fannie Mae crypto backed mortgage, there are no margin calls. So
Dude.
unlike, I know, right? So if the price of Bitcoin drops, you're not required to add more collateral or face immediate liquidation. Instead, your assets are only at risk if you fall 60 days delinquent on your mortgage payments. So that basically means that you can have your cake and eat it too. You know, like you can hold your Bitcoin and also turn it into a productive asset that allows you to essentially buy property. Really cool, man. Really
Without
cool.
losing, and the key is without losing exposure to that asset. So, like you pointed out, you get to keep your Bitcoin, and you're still exposed to the price appreciation and all of that. So if you're a long term holder of Bitcoin, this is a great way. Like this talks about yeah, right here. Token backed mortgages are a major first step to unlocking home ownership for younger generations that have struggled with barriers to saving for a traditional down payment. So, I mean, yeah, this is actually really big news.
Yeah, that is really big news. Now, the rates are a little bit higher for one of these Bitcoin backed loans, mortgages, or crypto backed mortgages than they are for a standard, let's say a standard 30-year fixed. So it looks like you're going to be paying something like 50 basis points more for one of these crypto backed loans through Better and Coinbase. But hey, if you're sitting on some BTC, this might be an interesting idea, especially in a bear market. You see, that's the thing. You buy a piece of property with a Bitcoin collateral during a bear, and then 24 months from now, when the bull really starts, rocking and rolling again, all of a sudden you've got your property,
Mhm.
plus you've got all this appreciation, likely anyway, on your collateral asset, that Bitcoin. So
Actually, that brings me to a question, David. Because so when you take these loans out, like say you take one Bitcoin, loan out, um, do you have to pay back one Bitcoin or the dollar amount at that time?
So one more time, Mike, could you?
So,
Yeah,
usually in DeFi, when you take out a crypto loan, on one of the protocols, like if you take a one bit, if you borrow one Bitcoin. if the price goes up, you still have to pay back one Bitcoin. So you might have borrowed at 30,000 and you got to pay back at 100,000. So is this going to be, pegged to the dollar amount? Like if you take out a $30,000 loan when Bitcoin is $30,000, so it's one Bitcoin and it goes up to $100,000. Do you still only pay back $30,000, or are they going to make you pay back one Bitcoin?
Oh, I see what you mean. Okay, no, no, no. So the way that this works is you put up your Bitcoin, your spot Bitcoin, or your USDC as collateral, and it looks like you only have to cover, up
So
to
you're paying back
20.
the dollar amount, not the crypto amount.
Right. So the unit of account is the dollar.
That's
So
beautiful.
so for
That's
example, for
Yeah.
example, if you want to buy a $500,000 home, you would need to pledge approximately $100,000 worth of Bitcoin or USDC to cover a 20% down payment. But the unit
Mhm.
of account is the dollar, not Satoshis. And thank goodness
Nice.
for that. Thank goodness for
That's
that because
No,
the
that's a beautiful thing. 'Cause well, that's
yeah.
what makes it work when you're talking about doing it in the bear. That's what makes it work, because if it was the way that, traditional DeFi worked, if you took out $30,000, or one Bitcoin, and it goes up to $100,000, you still have to pay back one Bitcoin. So you borrowed
Well,
30,000 and
so
you have to
not
pay back.
necessarily, not necessarily. So
Okay.
it really depends on what you borrowed. So if I were to, let's say, take one BTC, right?
Yeah.
Which right now is 68.8. Okay.
Okay.
Let's say that I put up one BTC, let's just call it 70K to keep the math easy. And then maybe I want to borrow at a 50% LTV
Okay.
against my one BTC. That means if I were to borrow stable coins, USDC, let's say,
Yeah.
against my one BTC, and I want to borrow at a 50% loan to value, then
I get
I could borrow 35,000. Either I could borrow 35,000 USDC, or I could borrow zero point 0.5 BTC. Now, if I were to borrow zero point 0.5 BTC against my Bitcoin, well, now all of a sudden I've got a Bitcoin supply position and a Bitcoin borrow position. Now, that could be good if I'm a little bit bearish on BTC, because if Bitcoin declines in US dollar value, because on all these money markets, the unit of account is the dollar. If Bitcoin declines in dollars, well, then my debt becomes a little bit cheaper to repay. Okay. So that could be a net positive for me if I'm leaning a little bit bearish. But if I'm not leaning bearish and I borrow in Bitcoin terms, and then Bitcoin appreciates in US dollar terms, well, all of a
Mhm.
sudden I have a bigger US dollar denominated loan that I've got to repay. So
Yes.
I don't want to borrow in Bitcoin terms if I think Bitcoin is going to go up.
Exactly. That was. I hope that that came across the way that I meant it, because that's kind of what I wanted to get at, as far as understanding how these loans work. All right.
Now,
White
Mike,
House.
so
Oh, go
but
ahead.
before you move on to the next news story, I put together all of this educational content about Shaul Kafir
Yeah.
and his background and what he's built with Canton, and it's some pretty cool video content. So I don't know if you want to maybe a couple minutes from now before he hops on, just so that
Yeah. No,
the
that would be
entire
great. That'd be a great segue into the
that'd be
interview.
cool. Yeah, awesome.
Yeah. All right. So let's blaze through a couple of these. I'll cherry pick them. Um, So it looks like the White House opens path to crypto in a $10 trillion 401k market. A new rule review has cleared, potentially allowing digital assets to become a staple of American retirement accounts. DeFi lender Moonwell faces a $1 million governance attack. A small $1,800 vote push is currently threatening $1 million in protocol funds, highlighting the ongoing vulnerabilities in DAO structures. I think this is an important one to dial in on because of the recent Aave, their kind of governance issues, and and some other DeFi protocol that have that DAO structure. Um, I'm not a huge fan of DAOs, and it's because I think it gives too much influence to based on the token holders. I would rather that a business is just run as a business than allowing everybody to have a voice, because I think most people don't understand what they're voting on, even if they do vote. And for the most part, I think that DAOs can be used to manipulate a project. I mean, what are your thoughts on it?
I mean, look, this is Moonwell and River. This is Moonwell and Moon River. It's their fault.
Yeah,
Look, they're the ones who set up the structure of these decentralized autonomous organizations, these DAOs. And what this attacker did today is actually pretty brilliant. So check this out. An unknown attacker exploited the thin liquidity and low participation in that Moonwell Moon River deployment. That's kind of like their it's called MFAM, these MFAM governance tokens. So this attacker spent $1,800 to acquire 40 million of these governance tokens, and then use the tokens to push through a malicious proposal. MIPR39. That was the proposal, and it's entitled Protocol Recovery Administration Migration. What could be wrong with that? Sounds good, right? you know? Well,
but
guess
this is what
what?
I'm talking about. I mean, this is what I'm talking about, though, is a bad actor, somebody that is intelligent, malicious but intelligent. They can find these ways to manipulate a lot of these DAOs and a lot of the underlying protocols to extract liquidity, or to basically profit.
Dude, so if this proposal gets executed, which it seems as though it could, if it gets executed, it would transfer administrative control of the protocol. We're talking about Moonwell here, of the
Yeah,
protocol's core smart contracts, its oracles, and 7 lending markets to a contract controlled by the attacker. This would
yeah,
allow them to essentially steal $1.1 million in user funds. And so
yeah,
this entire process, man, buying the tokens, the governance tokens, creating the proposal, and then reaching quorum, it only took the attacker 11 minutes. So the vote is still open, but so here's the good news. The community seems to be rallying to defeat this proposal. And it looks like a majority of active votes are now opposing this measure. But dude, this is not good. And I'm reading here that there's a crypto security firm, Blockful, that has recommended that Moonwell, their core team, could use this Break Glass Guardian. It's an emergency multisig that can override the governance process and strip the attacker of control before the proposal can be executed. But dude, what a fuck up on the part of Moonwell. Like,
yeah.
it's their fault at the end of the day, I think.
No, absolutely. Well, let's go ahead and jump into that content. We got about 10 minutes before Shaul
Awesome.
shows up, so let's jump into that content that you were.
Sweet. Okay, so this is what I want to begin with. There are 2 pieces of video content that I want to play for everyone right here. The first one is going to be a short piece of video content. It's just like a briefing. So it's just a very short briefing, and we're going to begin right over here, Mike. So this is a short briefing on the Canton Network. And then after we get through this is about 2 minutes long. Then I want to play the 8-minute piece of video content so that we can all, just prep for the interview with Shaul. I think it's going to be interesting. So just let me know if you can hear this, okay?
Okay, let's talk about how global finance is getting a major rewire. Believe it or not, billions of dollars just vanish every single day in the financial system. The culprit? Thousands of disconnected systems creating this huge, costly data traffic jam. So, what if one network could just sync it all up instantly and privately? This is the all-fi vision, moving from slow, siloed systems to one synchronized network. And this solution came from a pretty unlikely architect. Meet Shaul Kafir, part military leader, part pioneering cryptographer. A wild combo, right? He knew that real-world finance needed something much more robust than what was out there. And his whole philosophy was simple: make the tech fit the real world, not the other way around. To do
Well, real quick, I do want to point out he's a co-founder, so there was other people involved. It wasn't just him. But continue.
Right. Yeah, just want to make that clear.
He's very adamant about that, so I just wanted to point that out.
core problem in institutional blockchain. It's this classic trade-off. How do you let private systems talk to each other without leaking secrets? Fear's breakthrough? The Canton Network. Think of it like an internet of ledgers. It works using a blind sequencer. It orders transactions without ever seeing what's inside. The results? No more reconciliation costs, no more trapped cash, just a smoother system. And this wasn't just a cool idea. Wall Street went all in on this thing. We're talking over $6 trillion in tokenized assets running on the network. And more than 600 of the world's biggest financial players are on board. Yeah, the big ones: DTCC, Goldman, JP Morgan, even Broadridge's huge repo market runs on it. So you've got this great mix of global banks, tech providers, and even crypto native firms. And just look at that volume growth from Broadridge. It absolutely skyrocketed.
Right. So that's my understanding, is that they're going to migrate a significant portion, I think up to 15%, JP Morgan Chase's, of their repo book onto
Yeah.
Canton and Connexus over the next 24 months or so. So
Yeah.
all of this volume should just continue to go straight up.
Yeah.
So, what's next? Well, the roadmap is pointing towards a completely new financial reality. Big things are coming, like full treasury tokenization and opening up to Ethereum developers. This is really the dawn of AllFi, a 24/7 programmable financial world. Which leaves us with a huge question. What happens when every single asset is as liquid as cash?
That's pretty cool, man. So that's the primer. Okay. That's the briefing. Now,
Well, and real quick, I want to point out, the volume that you were talking about in that presentation. That is a major part of, for us as token holders, potentially, not guaranteed, but potentially what could make the price go up, because the burn mint mechanism that's built in, the more volume and usage that's on the network, then because all the fees are burned. All of those fees that are paid to use the network are burned, and we end up reaching a point, and we're flirting with it right now. We're like around 89, 90, or 0.89 or 0.9. Once we get to 1, then that's what's called equilibrium. And at equilibrium, that means that just as many tokens that are being minted, because, and this the reason I'm bringing this up is this confuses a lot of people, because Canton has an infinite supply, but it's the validators, the people that are running nodes and building on the Canton network, they earn Canton tokens for the services they provide. But through the network usage, if that can meet at that equilibrium point or exceed the amount of tokens being minted, it becomes deflationary. So basically, more tokens are burned than are minted, and potentially, not guaranteed, but with a shrinking supply, that could drive the price up. So I just want to point that out. Go ahead.
yeah, and the Canton Network generates a lot of revenue every single day. So there's
Yeah.
plenty of cash flow to be able to burn tokens, or maybe I think it's a mint burn mechanism, right? Not a buyback
It is.
mechanism. Yeah.
Yeah. And
So
it's a 2.3 million is the recent daily fees that are being burned.
great. That's pretty good. Let's take a look at this, Mike. So this is quite a bit longer piece of content. This is 11 minutes and 20 seconds long. This should bring us right into the interview with Shaul, and this is going to be great, bro. Check this out.
In traditional finance, settling a trade requires days of manual reconciliation across isolated databases. Decentralized finance, by contrast, settles transactions instantly on a shared infrastructure. If the technology exists to clear trades in milliseconds, the logical move for global banks would be to migrate their clearing operations to public Layer 1 blockchains like Ethereum. They cannot do this because public ledgers physically broadcast every transaction detail to every single participant. Exposing trade sizes and counterparties to the public immediately violates bank secrecy laws and regulations like GDPR. GDPR is the General Data Protection Regulation, a European Union law that mandates strict data privacy and the right to have personal information erased. To bypass the transparency problem, the financial industry spent years building private, permissioned enterprise DLTs, such as R3 Corda and Hyperledger Fabric. DLT stands for Distributed Ledger Technology, a decentralized database managed by restricted groups of participants rather than the open public. These private networks secured the sensitive data, but they failed to scale because they created closed data islands. An asset tokenized on one bank's chain could not be used as collateral on another without centralized intermediaries, entirely defeating the purpose of a blockchain. This radar chart maps the institutional quadrilemma. It shows traditional ledgers failing on scale and interoperability, while public blockchains fail on privacy and compliance. Any viable system must solve all 4 points simultaneously. The Canton Network approaches this problem with a strict engineering thesis. Solving the quadrilemma requires entirely destroying the concept of a global shared state. Instead of forcing every node to compute every transaction, Canton creates a virtual global ledger. This is a conceptual entity that results from the cryptographic synchronization of hundreds of physically separated independent nodes. To understand how this architecture functions, we must look at how it was built from the cryptographic ground up by Shaul Kfir and Digital Asset. Digital Asset is a financial technology company focused on building privacy-enabled enterprise blockchain solutions. Their central conclusion is that true institutional interoperability is impossible on a shared state ledger. Privacy cannot be added as an optional permission layer after the fact. It must be.
So that's what Ethereum's trying to do now. Add the privacy layer after the fact.
Yeah.
Structurally engineered at the protocol level. Shaul Kfir's approach to systems architecture stems from his early career in the Israeli Navy.
Dude, isn't that such a cool image? Like, look at that.
Yeah.
Isn't that amazing?
Serving as a missile boat executive officer. This environment required an absolute focus on mission-critical reliability and secure hierarchical control. He subsequently pivoted into computational physics and computer science, eventually working at the SCI-PR lab and at MIT under Ron Rivest. Ron Rivest is a Turing Award-winning cryptographer and the co-inventor of the RSA encryption standard, used globally for secure data transmission.
So the R in RSA is for Mr. Rivest.
During this period, Kafir co-authored LibSnark, a foundational cryptographic library for zero-knowledge proofs. Zero-knowledge proofs are cryptographic methods that allow one party to prove a statement is true without revealing the underlying data. This research formed his defining architectural axiom. Privacy is a mathematical prerequisite for any capital market, requiring absolute data minimization. Kafir brought this cryptographic philosophy to the founding of Digital Asset, where it drove the creation of their proprietary smart contract language, DAML. DAML is an open
So it's DAML.
source smart contract language designed specifically for modeling complex, multi-party financial workflows. DAML completely ignores the structure of standard imperative programming languages. Instead, a developer writing in DAML must explicitly define the strict rights and obligations for every party involved in the contract. The language enforces a strict stakeholder model. It physically separates signatories, who have the authority to execute a change, from observers, who are legally entitled to view the resulting data. By codifying privacy directly inside the logic of the smart contract, Canton ensures that sensitive trade data is never distributed to unauthorized network participants. If a competitor does not physically receive the encrypted data packets, they cannot execute traffic analysis to front-run trades. This localized data model is enforced by Canton's defining architectural breakthrough, decoupled consensus. Decoupled consensus
I wonder what Colin is going to think of decoupled consensus tonight.
is a system design that separates the execution of a transaction from the mathematical ordering of that transaction. The first tier of this architecture relies on participant nodes, owned and operated by individual institutions like banks or clearinghouses. When a trade occurs, the physical data routes only to the specific parties involved in the contract. These participant nodes independently execute the validation of their own transactions, as the only entities storing the clear text data. If individual nodes only possess their isolated private data, they theoretically cannot execute an atomic cross-chain swap without relying on a centralized clearinghouse. Canton solves this through the second tier of the network, synchronization domains. These act as centralized meeting rooms that receive and route highly encrypted messages between the isolated participant nodes. Inside these domains, a blind sequencer accepts encrypted transaction hashes, stamps them sequentially, and routes them back. This immutable ordering verifies party A communicated with party B, while the sequencer remains entirely blind to the actual asset type, quantity, or trade terms.
That's pretty
This
cool.
decoupled architecture creates sub-transaction privacy. It allows complex, multi-party financial workflows to be broken down into individual, highly shielded sub-actions that execute sequentially. In practice, this allows for atomic cross-domain swaps. A digital bond on Goldman Sachs's DApp can be exchanged for digital cash on JP Morgan's Connexius in a single, frictionless step. DApp is Goldman Sachs's proprietary platform for tokenized settlements, and Connexius is JP Morgan's blockchain platform for instant deposit token transfers. Because no single node must process every transaction on the network, decoupled consensus entirely shatters the scalability trilemma.
Decoupled consensus. Awesome.
Scalability trilemma is the concept that blockchains must compromise between decentralization, security, and transaction throughput. By abandoning a shared global state, the protocol scales horizontally to match the transaction volume of the entire global financial system. Running a global synchronization layer requires massive physical compute infrastructure, which presents a governance problem. The network requires a mechanism to pay for and maintain this hardware without handing control to a centralized corporate operator. To maintain neutrality, governance is handled by the Canton Foundation, an independent entity partnered with the Linux Foundation. It is co-chaired by critical market infrastructure providers like DTCC and Euroclear. DTCC is the primary centralized settlement system for the U.S. securities market, while Euroclear is a major European clearinghouse for cross-border transactions. The backbone of the global synchronizer is operated by supervalidators. These are regulated financial institutions running the enterprise-grade nodes responsible for routing encrypted transactions across various network subnets. Banks will not dedicate server space and compute power to an open network for free. The supervalidators require a precise, mathematically guaranteed economic incentive structure to maintain their operational uptime. This incentive is provided by the Canton Coin, or CC. It is the native utility token used to pay for network synchronization fees, utilizing a fair...
What do you know about that, Mike? A utility token with real utility for once.
launch model with zero pre-mine and zero venture capital allocation. The network relies on a burn-mint equilibrium. Institutions pay USD-denominated transaction fees by purchasing CC tokens, which are instantly burned. Simultaneously, the protocol mints new tokens directly to supervalidators as compensation, preventing inflationary congestion and uncoupling network costs from token speculation. This decentralized economic model already supports massive institutional volume. In early 2025, Broadridge utilized the Canton Network to manage $4 trillion in monthly repo volume. Broadridge is a global financial technology company, providing investor communications and technology-driven solutions for banks and broker-dealers. By enforcing a burn-mint equilibrium, the Canton Coin aligns the financial incentives of the infrastructure providers directly with the actual transaction utility of the network. It secures a $1 trillion ecosystem strictly through code, removing the need for a central corporate operator. The long-term trajectory of the network points towards Kafir's strategic vision of AllFi. AllFi is the theoretical merger of traditional capital markets with decentralized finance protocols into a single, highly efficient ecosystem. To reach that scale, the network has to resolve its final technical limitation. Canton's historical reliance on the highly specialized DAML language ensures privacy, but it isolates the network from the massive existing Web3 developer ecosystem. The protocol is actively deploying the polyglot Canton upgrade, an engineering initiative designed specifically to bridge this developer gap. Polyglot integrates WebAssembly, allowing the Canton virtual machine to natively execute Solidity code.
Does that mean that EVM chain developers will be able to build dApps for Canton? That's what it seems like.
Well, Shaul's here. We can ask him.
Oh, great! Because I can't see. Oh man, there you are. Because I was looking just at my screen at the video.
I was waiting to see how long it's going to take for you.
I didn't even notice, man. Shaul, how
Good to be here. Next to drop in.
Man. Good to meet you.
Actually, who made it? It's really cool.
Yeah. So I think Mike, if you want to bring him back up. So Shaul, I slaved away on that video for hours. No. Nice. I'm just kidding. No. I use Notebook LM, man. Notebook LM. It's amazing. It's an amazing tool.
Nice.
Yeah.
It's very cool. Yeah. It's really nice to jump in and see that. I think most of the things there were accurate. I'd say actually one thing that jumped out was it said the SVs are run by banks, and that is not accurate.
Okay.
I'm not sure of this, but I think there's no bank actually running an SV node. But there are some financial institutions. So like there are pretty big financial institutions running the SV nodes, but there are also pretty small shops that just joined the network early or are contributing in some way and started running SV nodes. But yeah, that was very cool.
Yeah, man. So I actually put together, in addition to the video content, I put together a slide deck that maybe at some point I'm interested to get your input on. But I think it's pretty cool. And I think that you'd be able to tell us, hey, this is a hallucination or this is real. So yeah,
mind if I do a quick introduction? So, Shaul, this is David. Myself and Jeff, we had DeFi crypto and airdrops. We rebranded and started a business with David and Don, and he is our resident DeFi like savant. He knows DeFi very deeply. And so I wanted to kind of hand it off to him to really get to the meat and potatoes about Canton, because a lot has you guys have done a lot since we talked last.
Yeah, it feels like it's changing every week.
Yeah, man. So Mike, if you want to just give a little introduction for Shaul, and then I can hop right in, man. I've got plenty of questions.
I mean, anybody that doesn't know who Shaul is, and you definitely haven't looked into Canton Network. So he's one of the co-founders of Digital Assets, and Digital Assets is what built Canton Network. It started his career in the military as an executive officer on a missile ship, and the display that you just did, David, really went through a lot of his time at MIT and his time working on these different projects and encryption, and just him and his team saw a need for what they built out, and they quietly built out for like a decade. While everyone else was hyping up projects, they were just quietly in the background. And one of the things that impressed me the most about Canton Network was the way that they launched their token. There was 0 tokens held by the team, 0 tokens held by any VCs or investors, all tokens. It was one of the fairest launches that I have ever seen.
Yeah, we're fans of Satoshi, and that's the way Satoshi did it. And he was early to the network and mined a lot of coins, and we were early to our network and mined, but we didn't want anything to be unfair here. We did believe truly in a fair launch, and that anyone contributing to the network from day one should be earning coins from day one.
100%. And I'm looking forward to potentially getting a validator node set up here in the not too distant future on the Canton Network. But Shaul, I'm excited to meet you. And what I really want to start off with here today is a little bit about your origins and foundational philosophy. Yeah. I know that you graduated first in your class from the Israeli Navy Academy and spent years as a missile boat executive officer. Yeah. So what I want to learn from you is how that high stakes mission critical environment, how did that shape your approach to designing these distributed ledgers?
You're taking me back, but actually I do think I had a lot of influence, and I don't think I've ever talked about this publicly, but yeah, my career started in the Navy. As I live in Israel, and it's mandatory for everyone here to join the armed forces, the Israeli Defense Forces, and so I joined the Navy. I was a Navy officer. I think there's so many lessons that I've learned from that period. it's kind of Murphy's law on steroids. Anything that can go wrong will go wrong. So you really need to build everything for resilience. And one of the things I talk about a lot in the crypto space and in Twitter is like, I don't think people really think too much about the blast radius of things they're doing. And there's a very big difference between like if something fails or if something fails catastrophically and how fast you can recover from failure. So I think that is really something that came from just a lot of operational experience of everything will go wrong. And you need to know that when things go wrong, and they will, that you know exactly what you're going to need to do. And you have to drill through these things and do dry runs a million times. Like every feature we put out, we do dry runs. We think about how do what's the supportability of this feature? How will someone recover if there's a bug in our code? And a lot of that thinking just came from that prior experience that had nothing to do with with crypto or computers, or had a lot to do with computers and systems that we were running. But I've really seen the difference between things that were well architected. A missile boat is a very, very complex piece of machinery, and you have systems from hundreds of different vendors, and you need to keep all this operational. And there's a big, big difference between things that were built with maintenance in mind and with operations in mind. I can give the American SEWA system, that big Vulcan cannon that you have on the front of ships that now a lot of people are talking about it in the current strike groups in Iran. Those systems were built in the 60s, and there is nothing you can't discover during operating that thing. If anything goes wrong, you will know about it immediately. You will know how to find the component that went wrong. You will know how to fix it at sea. That's like an amazingly resilient system that was built for maintainability. And then I won't name other vendors where you had systems that were a complete mess. And anytime anything went wrong, you would need to have a helicopter bring in components because you don't know what would go wrong, and you need to have technicians fly in and fix it. And I think a lot of that thinking went into to the way like I was thinking about digital asset and Canton, in the sense of you need to be able to operate these things, and you need to be able to support them in real time and live, and things will go wrong.
Yeah, things definitely do go wrong, but you got to be able to fix them immediately. And for mission critical stuff, especially in finance, man, being able to swoop in immediately and get it done, that's important. So during your time at MIT and prior to that at the Skipper Lab, I'm interested in this. You co-authored the LibSnark library, and you worked under a Turing Award winner, Ron Ribest of RSA fame. So how did this foundational work in zero-knowledge proofs, how did it inform your belief that privacy is really a prerequisite for a functional digital market? And we see so many chains starting to build privacy in, or at least talk about it, but privacy is fundamental. So how did your belief transform at Skipper and MIT?
Yeah, and first of all, to give the credit, the bulk of the work was not MIT. That was, there was a period that I was there as a visiting scientist, but the bulk of the work was done by two professors, one from Tel Aviv University, Eran Tomer, and one from Technion, Eli Ben-Sasson, who's today the CEO of Starkware, and a lot of other people who are great colleagues. And the work there had nothing to do with crypto when we started out. So that was just like, I was at Technion. I was thinking of pursuing a PhD, and I was learning about PCPs, which is one of the underlying technologies of Starks, and it just sounded like magic. This idea that you can have one computer compute something for a long time. Think a Bitcoin miner can go and verify the entire blockchain, and then you can just send some mathematical proof, and within milliseconds, someone else can just say, "Yep, that worked," as if they just ran years of computation. And that just sounded magical to me, and it was pure intellectual curiosity that I thought I need to work on this. I think I was in my second year of my bachelor's degree that I kind of fell in love with this, and I went to Eli Ben-Sasson, who was one of the prominent researchers in this area, and asked to work for him. And he pretty much said, "Kid, you don't know enough, but if you take these courses, you can come back to me in a few years and work for me." So I went, worked at Intel for a while, and then a year later, Eli reached out to me and said, "Okay, I need programmers. You have the prerequisites, so I started working on that." And yeah, we were trying to prove to the world that this thing is not just a theoretical construct, but it's actually something that can run. We were thinking about all kinds of applications that were more even in the medical space and the defense space at the time. But then I got in parallel, I got very interested in Bitcoin, so started opening a Bitcoin brokerage in Israel because it was just very hard at that
Right.
time.
It was called Bits of Gold, I think.
Bits of Gold. It's still running. It's
Yeah,
still the
yeah.
largest Bitcoin brokerage in Israel. I'm no longer involved there, but great company still running. And so I was doing those two things in parallel. And at that time, there were a lot of discussions about scaling Bitcoin. This was 2013. And we went and suggested to the core Bitcoin devs that zero knowledge proofs would be a way to scale Bitcoin. This was before we were even talking about privacy. And that was kind of the origin. And within doing those two things and both understanding privacy and cryptography from that side of LibSnark and seeing kind of the real world problems that existed in a Bitcoin brokerage, especially on the side of interacting with financial institutions and with interacting with regulators, that kind of brought together all of these things of, okay, you can use this technology, not exactly in the same way that it's applied by Bitcoin or by, Ethereum didn't exist yet, but there was Mastercoin at the time. There was, I think, Factum at the time. And, we thought you can use the same set of technologies, not in the exact same way, but to really cater to the needs of traditional financial institutions. So that's what we set out to do back in 2014.
Wow. I bought my first Bitcoin in 2012. I wish I had held it, man. But did you ever have an inkling?
We all.
I know, right? I'm curious. Did you ever, have an inkling that what you were working on with LibSnark and ZK Snarks, that would become like the privacy layer for many of these chains? Did you ever think that was going to end up happening, or it just kind of happened?
I think it kind of happened. I mean, when we were working on pre-Bitcoin days, we didn't really, we didn't think about it too much. We all had a feeling that there's something really big here. I mean, as I said, that's what really sparked my interest back when I first reached out to Ellie. It was clear there's a big technology here, and if we can get it to actually run kind of in practical terms and in a practical runtime, then this is huge. That was pretty clear. I think once we came across Bitcoin, we completely realized the potential for scaling, and very quickly after that came the idea behind Zcash. That was a collaboration between Skipper Labs and the ZeroCoin team, and that became Zcash. So it was pretty clear at that time that we're onto something big. And in 2014, when we started Digital Asset, we thought we would be using zero knowledge proofs for Canton. Today, it doesn't use zero knowledge proofs at all. But we completely understood that this is a technology that could be the underlying technology for a massive network with privacy, because it checks all the boxes, scale and privacy. Again, today we're not actually using it. So over the next 2 years, we kind of came to a conclusion that there are better ways to do things that achieve the same goals. But I'm still very much a fan of the technology. I think it does amazing things in certain places, and I think it's overhyped in other places.
Huh, that's interesting. Privacy is extremely important, and you've been an advocate for pragmatic adoption, suggesting that technology should adapt to existing rights and obligations rather than forcing institutions onto these entirely transparent digital ledgers. Why do you believe that this approach is superior to, that rip and replace mentality that is often found in public Web3 development?
Yeah, first of all, I think the crypto space, unfortunately, has been very condescending towards traditional companies. As I put myself in that same group, from 11 and 12 years ago. I think I've matured a lot over the years of kind of realizing that regulators and people in financial institutions are not stupid. They, everyone's trying to do their best, or most people are trying to do their best. And you can look and yell at, Swift is stupid. Why are they doing things this way? But if you take a historical lens on what were the requirements and the technologies at the time and how they've evolved over time, I think you learn a lot. I mean, I've been in this in this space for about 15 years now, slightly less, and I'm learning something new every day. And every time a new, I'll call it competing chain comes up, I always look at it in the sense of like, what do they know that we don't know? And you always learn something from them. And unfortunately, I think that in this space, there's not enough of that kind of thinking. And like, I've just been in Twitter wars all day today with people who haven't, bothered to actually look at what Canton does, but have very, very, very strong opinions about it. And, I think that's just, that's unfortunate. So
it's actually funny, Shaul, that you say that, because I just came across a social media post that you commented on. And somebody said, can colluding a colluding set of super validators, say Visa and other consortium members, reconstruct this transaction? Because you had posted that you sent $1,025 in USDC on Canton.
So Mike, I think if you're trying to share your screen, you're sharing my slide deck for later.
No. I'm just reading it to him. I'm sure he's familiar with the post. I see this a lot, and that's why I feel it's so important to have these interviews. And let's see, is because there's a lot of confusion about what Canton is and how Canton works. So I mean.
Yeah, and actually, I'd say this is someone from. I didn't know this actually when I engaged at the time, but I realized later that he's from Starkware, and I say this is the kind of engagement I like, because I think it started a bit as a Twitter war, but it ended up being more of a I think good faith discussion. So I love when that happens, and I try to disengage when it's just like people kind of spreading FUD and just the random Twitter wars. But there's this meme out there that people are kind of thinking that. Canton does not use cryptography for trust, and that it's you must trust the institution, and that it doesn't really change anything on the doesn't change how things work today. And that's to my point of being condescending. It's like, honestly, do you think we're not familiar with crypto? Do you think we're not familiar with the crypto trust model, and that we just said we've worked on this for the last 15 years, and then ended up saying, oh yeah, just trust JP Morgan? That's not how it works. But I think people don't actually do any research, or I won't say people. A lot of people do, but a lot of people in the crypto space don't actually do research and don't actually go and read the white paper and read the technical docs. I want to believe that when we look at another network, and we do assess every other network, and we do assess every other protocol out there, we get a lot of requests from our customers and users to go and potentially integrate with things, and we go into a lot of depth. Again, our assumption is that if we don't understand it, we're probably missing something until proven otherwise. So, it's it's kind of the state of play today.
Yeah, there's always something new to learn. And speaking of trust, and I want to shift gears into that, solving the quadrilemma. Okay, so the Canton architecture, and you've described traditional finance as suffering from like a reconciliation crisis due to siloed data. Yeah. So how does Canton's virtual global ledger, and by the way, that's the first time I've ever heard that term, such a cool term. How does Canton's virtual global ledger eliminate this post-trade reconciliation while avoiding this data leakage that you see with other public blockchains like Ethereum?
Yeah, I think if we try to really boil down what we got with blockchains, in what way are blockchains better than what we had before? I think it really boils down to a very small number of things. That's one, you can compose transactions across multiple different companies. So the example that I give a lot of times, like if I want to order a flight and a hotel and a rental car, I can go into like an aggregator that shows me all of that. But when I want to click, purchase, I'm either purchasing from a broker, or I need to go and purchase three different things. I can't say, hey, I want to book my flight, my connecting flight, my rental car, and my hotel. And if any of those fails, then please don't book it because I may want to change something. And so that composability across applications is, the one big feature that we got from cryptocurrencies. Another one that we got is the control of our own data. So the fact that I have a node, and my node is the thing that verifies my interests, and I don't have to trust anyone else. That is a second very, very big property that we got. That we know that we can keep our nodes in sync. Like every company had a database before crypto, but the fact that now we can have databases that are actually sharing the same application logic, the same smart contract, and they're updating in real time, and we know that they'll never go out of sync, but still I control my database and you control your database. That is a big thing. Now, I think there are other things that people are, there's definitely censorship resistance. Our approach in Canton is that you're not really trying to prevent censorship from the issuer of an asset. If an asset, asset issuers typically in the real world can blacklist and say, I don't want this, this address to interact with my asset. That is a legal requirement in most places. In Canton, there is censorship resistance for things like Canton Coin. You can build censorship resistance, but for tradfi, specifically for tradfi assets, that's typically not a requirement. And on the flip side, they do have the requirement to be able to censor transactions. Now, you may disagree with that at the fundamental level. And that's where I think a lot of the crypto space gets mad at Canton. Like, you may agree with it, you may disagree with it. Like, I want to know that I have a self-sovereign money. I want to hold Bitcoin. I want to hold Zcash. But when I'm holding Tesla stock, that's not the case. Like, when I'm holding Tesla stock, my broker can now freeze that transaction or any kind of tokenized real world asset. So again, for those assets, that is not a design consideration. And then there's the thing that was always a bug in crypto, and it's kind of weird. Somewhere around 2015, 2016, it turned into a feature, and that's transparency. And
that's so funny.
It's like Bitcoin was implemented in transparency because Satoshi didn't know a better way to do it. He wrote that himself in 2010 on the Bitcoin Talk forum. Like, if he had a better way, he would have done that, but he didn't have a better way. So it was considered a bug, but it was like a necessary evil. The only way to implement a global state machine that was known at the time before zero knowledge proofs was to fully replicate everything transparently. And everyone just took that later and said, oh, this is a feature. It's not a feature. It's a bug. Like, if you want to make your data public, that's very easy to do. So that's one of those things that I think is kind of coming. So going back to the question, what Canton really did with this virtual global ledger is we came and said, okay, what's a way to do consensus? What's a way to get composable transactions? If we take a look at those first two features, say, if you want composable transactions across apps, and if we want everyone to control their own data and to have cryptographic proofs, what are ways to do that? And the first approach was zero knowledge proofs. That's that's where I came from. That's the approach that I knew. And over time, we realized that there's another approach, and we created something that we call proof of authority. It's the Canton commit protocol, but it's something that's honestly much closer to commit protocols for two-phase commits from the 70s and 80s than to cutting edge. Now, that makes it sound boring to people that we're taking things that are closer to protocols that were known in the 80s than something from now. But going back to the point of like resilience, these are really simple protocols that are very, very easy to debug and triage and understand what's going wrong. So if you have something that fits all of your requirements, it's much simpler, and it's something that has less of a blast radius, and it's something that when you have any kind of operational problem, you know how to find that, you know how to fix that, you know how to roll back from that. We prefer that as the approach. It's a different tool in the toolkit, but it achieves the same goals. So kind of one of the biggest innovations in Canton was this idea of this global virtual ledger. And that's something that doesn't get enough credit. I actually think that's one of the biggest innovations, and much more than other things that we are credited for. But the way that the demo language is constructed and the underlying mathematical model of that language, I wish I could take credit for that. We have great folks on our team who thought of that and built that. That is not something that I had.
That was actually my next question was about DAML, DAML. So a major breakthrough that you engineered, with your team is stakeholder-based privacy. And so that's enforced at the smart contract level using DAML. So can you explain just real quick how decoupling the transaction execution from ordering allows blind sequencers to operate without seeing the contents of a trade? That's really important. How does that work?
Yeah, so they're two separate things. They're two separate innovations, none of which I can take credit for. I think I can only take credit for finding the problems, and then other people found the solutions. But the first one was, as we started to build Canton 2014, 2015, we were using the types of primitives that existed. We were looking at things like Bitcoin script. We were looking at, this was before WASM existed. It was before Ethereum was launched. I think the EVM design was already there, and we were looking at it. And we were looking at things like colored coins at the time. And what we realized that as we were implementing use cases, we really needed to have PhDs who have very extensive background in all three of cryptography, distributed systems, and security to implement anything correctly. And we said, this doesn't scale. This is a security nightmare. The type of things that we've seen over the years happen in the Ethereum space, so many of the hacks were avoidable. But we kind of very early on, we saw that we are unable ourselves to write good code that doesn't have significant security errors. At that point, we said, okay, we need to take a step back. We need to think about what's the abstract way to define a smart contract where you don't need to be a genius to write this code. And again, I can take credit for identifying the problem, but then we found a group of folks in Switzerland who went and actually had all of the background knowledge and the ideas on how to design this kind of language. so that's the demo language. And the demo language has this concept. It doesn't talk about the implementation at all. It's this abstract language that just says, hey, here's how I can specify workflows across different financial institutions, across different parties in a way that's aware of privacy. And it doesn't talk about at all how the machinery works to make that all work. It just assumes that someone else is going to build a consensus protocol for that. It says, at this abstract level, this is who should see what, and this is who should authorize what.
Got it.
And then the next big innovation that was around 2016 was already the Canton protocol, which is the commit protocol that says, okay, this is how nodes can agree between them on ensuring that they always have the same state, and that if one of them changes the state, it's according to the rules, and everyone else changes the state at the same time.
Got it. Okay, so that kind of feeds into my next question about interoperability. So, compared to these early enterprise networks like R3 Corda, which created these islands of data, or maybe something like Hyperledger Fabric, which relies on these complex channels, how does Canton seamlessly scale that interoperability across hundreds of institutions?
So this is where I think Daml shines, and it's actually R3 Corda got a lot of things right. I think they had a very strong team in the first few years, and they were going towards trying to do a permissionless global network. But what they got very wrong early on, in my view, is they didn't think about how this thing expands, like from a composability point of view, early on. And that's where the demo language came and said, okay, we're not assuming that any single entity has all of the data. We're just assuming that all the data is distributed from the start, and you need a way to build applications on top of each other. So, it's kind of in the weeds, but there's a very specific mathematical structure behind the language itself that always assumes that there's a minimal amount of knowledge, that everyone sees a small part of the transaction, but you can still compose this larger transaction on top of these smaller transactions. And every node sees a different view of the transaction within the network.
Got it. Okay. So let's talk a little bit, let's switch gears here, and let's talk a little bit about AllFi. Institutional DeFi, AllFi, and the tokenomics of Canton a little bit. So your strategic vision centers around AllFi, which is essentially, my understanding of it anyway, is merging traditional and decentralized finance.
Yeah.
So what does this weekend revolution look like in practice for a massive market like this, $20 trillion repo sector?
Yeah. I think in practice, there's a lot of very, very interesting stuff happening in DeFi. The DeFi space is innovating way faster than we see in the TradFi space. And once you have this idea of composable transactions, it makes a lot of things possible that were just not possible before. If it's DEXs and AMMs and flash loans, love them or hated them. Again, some people have different opinions on them.
It depends. It depends on how they're used.
It enables a lot of things. Like one of the best collaterals in the world today, if you want to take a loan, is Bitcoin, because it's really, really, really easy to get a collateralized loan against Bitcoin or any kind of crypto. It's really easy to get collateralized loans, even in a decentralized manner. So I think there's a lot of benefit of those kinds of things in the TradFi space. So I think we're going to see more of the primitives that grew up in DeFi world come to actual assets. Like there's no reason that you wouldn't be able to do a collateralized loan across different vendors across the globe. Like the fact that I have an asset that's issued in Israel, I would want to use it to take a loan, in any other currency in any other country against that asset. And those are the kinds of things that you needed a whole insane chain of intermediaries before you had crypto. So I think disintermediation is very real and it's coming, but it's not disintermediating the banks. Like the retail banks are here to stay. Some will, some will grow, some will thrive, some won't. But I want a retail banker. I want someone with whom I have a relationship, and I want some institution that's safeguarding, the bulk of my wealth. I want a broker. They have real functions, the brokers that protect me. So some of them will get disintermediated and some won't. But I think there are a lot of service providers today that exist solely because of the inefficiency of the current system that will go away because the system is becoming more efficient. We don't need this whole chain of financial vehicles that wrap another financial vehicle that wrap another financial vehicle across this chain just so that I can take some asset that I have in Israel and use that for a loan somewhere else. So those are the kinds of things that will go away and reduce a lot of friction.
Yeah, a lot of regulatory demands. So the Canton Foundation ensures organizational neutrality, right? And it's co-chaired by systematic infrastructure providers like DTCC and Euroclear. So, how do you balance the heavy regulatory demands of those members with the ethos at Canton of decentralized governance?
Well, first of all, I don't think there's a problem. I don't think there's a tension there between those. People don't know this, but a lot of these institutions are actually either not-for-profit institutions or consortium institutions. Like DTCC was built as a consortium. It is owned by financial companies in the U.S. Swift is also started as a consortium. So these are companies that actually, at their core, there is decentralized governance. They're not for-profit companies that are trying to, to squeeze money out of the users. They're actually trying to make the system more efficient. Now, you can argue how successful or unsuccessful they've been over the years, and I think here there's a lot of context that people are missing about why the system exists as it does exist today. But these companies, what I've seen over the years, they really know how to do decentralized governance very, very well. Now, I wish things were a bit more transparent, and that's why I think the crypto ethos is great, is bringing in more transparency and more of this expectation that things do not happen in dark rooms. And I think a lot of these companies grew up pre-internet, and their processes are not completely transparent processes, and that's fine. So we want to bring a lot of this crypto ethos. Like, one of the design decisions we made early on is that super validators on Canton.
Hey, yeah, I'm sorry, Shaul. Give me 1 sec.
I'll take over.
Yeah.
Go ahead.
Yeah, I'd say one of the design considerations we had from very early in is like there should be no information asymmetry between super validators and anyone else on the network. And that's, again, bringing in some of the crypto ethos. The idea of like net neutrality, that everyone is equal. You buy traffic and there's no traffic that's more important than others. Those are things that may not be obvious for someone coming from the tradfi world, but were very important crypto ethos to bring in. And there's another one of those, like, I think, just weird areas where people are kind of attacking Canton without really realizing. I saw a lot of this today of like, oh, now, Visa just joined as a super validator yesterday on the network. Everyone's like, oh, now Visa is going to see all of your transactions on Canton. It's like, no, Visa does not have any privileged position to see anything on Canton that you cannot see. So that was very important to us from an ethos perspective, like bringing those crypto principles, the principle of permissionlessness. Again, I don't know why people are attacking constantly Canton, saying it's permission. You can do whatever the hell you want on Canton without any permission from anyone. These were all very important aspects for us to bring from the ethos of the communities we grew up in. We grew up in the open source community. We grew up in the crypto community.
Now, what's so interesting to me about Canton, outside of all of its internal mechanics, is the coin, CC, has been, one of the best performers recently, basically since it launched, especially if you measure it in Bitcoin terms. That's something that I always do. I always take a look at any digital asset that I want to learn more about. I take a look at it in Bitcoin terms. So here's CC. This is just the US dollar pair. Now, if I just go ahead and price this in BTC, Canton, the token, has performed actually quite well in Bitcoin terms, especially when you compare it to just about every other altcoin out there. And so what I want to ask you is about the burn mint equilibrium, that model. It was launched with no venture capital allocation or pre-mine, the Canton coin was. Why was a fair launch utility token necessary, do you think, to align the incentives of regulated entities acting as super validators?
I think whenever you have decentralized infrastructure, there is no one company here. You need some mechanism to align everyone, and this is an area that is well understood already in the crypto space. I think one of the biggest innovations in crypto was all the game theory, the mix of game theory and economics. So you need a way to reward the behavior you want on the network. And the things we wanted on the network, we wanted there to be very robust infrastructure that has an incentive to maintain uptime and to, frankly, keep the servers up, and not just on the day one, when things are inflationary and people are getting coins, but also at some point when it's a zero-sum game, you want people to get rewarded for running infrastructure.
Right.
But more importantly, you want the people who are bringing the most value to the network, the users and the applications, they need to be the ones rewarded. And this is one where we took a lot of inspiration from the credit card networks. I mentioned Visa joined yesterday, announced that they joined the network, but we took a look at Visa and MasterCard and what they've done decades ago and why they've been so successful. And a lot of it was around getting the distribution of fees correct, to get the correct incentives across all of the ecosystem to do the things that you want them to do as a network. So if you look at things like VisaNet, the infrastructure itself takes a very small portion of the rewards. When you pay fees with your credit card, they take, I think, 0.2 or 0.25% of the rewards, the fees that a user pays. The rest of it goes to the people who are bringing value to the ecosystem. It goes to the merchant acquirers and it goes to the issuers. And then those in turn pass a lot of those rewards to the users. When you get flight points, that is the issuer who got some of the fees back, giving those fees to you. So we wanted there to be innovation on the fee structures as well. And we said, from the design perspective of the design, we wanted the coins to go a small portion to the infrastructure, the biggest portion to the app providers. And those app providers would need to compete on how they redistribute that across their users. Then there's a portion to the wallet providers, those who bring the users into the network. So you can think of it as the infrastructure, the people bringing the apps, and the people bringing the users to the network. On the fair launch, we just thought it's fair. It's
good.
There's a reason it's called a fair launch.
So speaking of infrastructure, right? So historically, Canton has relied on DAML for safety features, but this new polyglot Canton initiative, it aims to support Solidity through WebAssembly. So is this move to EVM compatibility, is this primarily a strategy to capture Ethereum's massive developer talent, or what's the plan here?
Yeah, so start with saying DAML, in my view, is and will remain by far the most secure way to interact with the Canton Network for the foreseeable future. Now, that said, we know where we live, and most people today already have Ethereum apps, and there was a lot of demand, and people were very interested in saying, okay, I've built an app on EVM. I don't actually need the level of privacy that DAML gives me. So transparency is fine for me because I worked under those assumptions on Ethereum, but I want to interact and compose with the assets that are already on the Canton Network. So that we want a way to bring just things that we've already built and bring them into Canton. There are other cases where we've worked with financial institutions who said, this is great. We love DAML. It's secure, but it's hard to learn. It's a functional programming language. We would love a way to, all of our developers are Java developers or Rust developers or C++ developers. We would love a way to interact with the network in the way that we know, and we're willing to live with those trade-offs. Over the years, we've come to the conclusion that we know how to secure the network well enough, regardless of if it's DAML or another language. So we've opened up this direction of polyglot Canton and allowing other languages to live alongside DAML on it. I'll be honest, what I'm seeing, I've been vibe coding for the last few days and letting Claude write DAML applications.
Yeah.
And I think that barrier to entry that used to exist of like DAML is very secure, but it's a new language that people need to learn. I don't think that's going to be a problem in the next 2 or 3 years. So actually, that's kind of a problem that's been disappearing. Claude has been doing an amazing job coding very, very good DAML applications. Still, I would still review everything as a human because of security concerns. So, but that said, we have amazing companies like there's ChainSafe and Zenith who are bringing other runtimes into Canton. So that's not work that we Digital Asset are doing. We're working together with them to review code and to help them with the design and to help make sure that everything works very securely and within the same tokenomics as Canton. But now there are a lot of companies that really grew up in the EVM space who are bringing EVM and we're doing actually core work on Ethereum and are bringing EVM into the Canton space. So we will be at a place where very soon you can run a Solidity program on a ZK EVM. It actually has composable transactions, so you can do something like a swap between an asset that was written in Solidity and something that was written in DAML, and you have both of these swap within a single transaction.
That's so cool. So I'm curious about the privacy layer there. So with Polyglot Canton introducing standard Ethereum communication protocols like JSON, RPC, how are you going to enforce Canton's need to know privacy on traditional Solidity contracts?
Yeah. So the Solidity portion you can't, because the EVM was not built for privacy. So let's say there's a token that is, that's issued on the EVM on Canton, and you want to swap that with USDC on Canton that's running, on DAML.
Right.
The USDC portion of it has privacy. You don't see that. No one in the network will see that. But on the on the EVM token side of it, I don't know exactly how the companies right now that are building it, but I don't think within the EVM, within the ZK EVM users, so for any instance of the ZK EVM, my current understanding, and I may be wrong here, so I apologize to Zenith if I get this wrong, but my understanding is that within that ZK EVM, there is no privacy amongst the users of that EVM. You can spin up multiple EVM instances, but within any one of those, you can think of it as very similar to like a ZK EVM rollup on Ethereum. The users of that EVM do not have privacy from one another.
Got it. Okay. So let's think about the future, right? The roadmap to 2030. So the network is targeting $30 trillion in tokenized assets by 2030, with expansions into equities, commodities, cross-border European debt. You need some of that return-free risk, right? What is the single biggest technical or regulatory hurdle that you must clear to make this T plus now future the global standard?
Yeah, by the way, I don't know where the 30 trillion number comes from, but I like, there is no network view. This is, the network is decentralized, and maybe the Canton Foundation and maybe from Digital Asset, but we are targeting very, very massive growth over the next few years. I don't see any regulatory barriers. That was one of the things that from day one we said we want to be able to work within all of the existing regulatory frameworks, and we said that even before the current U.S. administration. Our belief at the time was that using Canton, you can be compliant with all of the regulations that existed in the U.S. Of course, it's much easier now under the current administration. So there aren't any regulatory barriers. We are working very heavily on increased throughput. The next release of Canton will have an improved BFT layer that can move scale to much higher throughputs. And we're working on improving the entire developer experience of getting parallel synchronizers. So today, most of the transactions on Canton, not all of them, but most of them are running on what we call the global synchronizer. But you don't want one synchronizer synchronizing all the transactions for the entire world. So, if Circle or Visa or anyone who's doing high throughput transactions, they will want to run on separate synchronizers that are optimized for their workload. Just like on the internet, you typically optimize things for very specific workloads. So when you get to very high throughputs, you always need to think about the specific application and kind of the specific footprint of the machine that's running that application. So today you can do that. The experience is not great, the developer experience. So we're working very heavily on improving the developer experience, on tying the tokenomics of the entire mainnet to be one unified tokenomics, whether you're on a private synchronizer or on the global synchronizer. That's a big push right now to bring more of these assets on chain.
Got it. Okay, because I'm taking a look over here at the slide deck that I created for our conversation today. Mike, I don't know if you want to add this to the screen. Awesome. So check this out. I'm curious to get your thoughts on this. So this is from cryptographic theory to global standard, right? This is just the roadmap.
Yeah.
Shaul, what do you think of the roadmap here? Starting in 2002 to 2014 with your work at MIT, all the way back here, right?
I don't think my being in the Navy had anything to do with the success of Canton in that sense, but so I wouldn't put that as a roadmap item. But our story started in 2014. I'd say my co-founder's background is probably even more important, coming from the crypto space and coming from deep within the traditional financial space at DRW. But our story started at 2014. I'd say 2020 was also a big pivot point for us, because 2020 was when Canton went live. So since 2020, it's been processing transactions and it's been growing pretty significant between 2020 and 2023. 2023 is really when we started hitting the trillions numbers. When we were working with quite a few traditional financial institutions and doing significant stuff, and that's also the point at which we announced that it's going to be a public network and not just a private blockchain. To be clear, that was something that from 2014 was within digital asset was very clear to everyone that we're moving towards a global public permissionless network, but we only went public with that around in 2023. Other than that, the roadmap is pretty much correct. In 2024, the global synchronizer and Canton Coin were launched. The testnet already was launched in 2023, so it had significant. There's already significant, as I was saying, like the experience of doing drills for a long time before you go to the real thing. We were doing a lot of operational drills on the testnet back in 2023. And yeah, that moved up to this point where we have companies like JP Morgan, DTCC, Visa, working on either running on Canton or moving towards running on Canton, alongside a lot of crypto native companies that grew up in space. If it's things like Circle or CBTC and similar things.
Amazing. And I'm really looking forward to seeing how public chains are going to be able to fit into this with that EVM compatibility. So this all fi convergence loop, um, removing siloed friction and being able to settle instead of T+1, hopefully atomic settlement at some point in the not too distant future. Is that on the roadmap there? Atomic settlement between these institutions?
I can't talk to the specific things about these, but I guess this one is a simple one, and everyone's been public about it. But
right,
so financing is essentially lending, and broader DLR is collateralized lending. So if someone wants their cash leg of a loan to be using JPMD, the JP Morgan Connexus deposit token, sure, that's something that's something that's already these kinds of transactions are already happening daily on the Canton Network. So the interesting thing here about people don't realize how we kind of expect the financial world to work 24/7, but this is actually innovative. This is something that doesn't happen today in the traditional financial world. You cannot just do a repo transaction at any point in time of the day today. You can't go and open a loan for 37 minutes if you need that for a very specific trade. And that's something that you can do today on Canton. You can take a loan for any amount of time. You can collateralize it. Repo loans are typically very, very large notional. So a typical repo loan would be, few $1 billion. That's not something where the cash leg just transfers at your bank. You don't move $1 billion in your retail bank account. So that's something that would typically go and actually hit the more institutional things. And the Fedwire has certain hours of operation. So the fact that now you have tokenized cash that can move at any notional size 24/7, that is a very big thing for improving the efficiency of how the financial world works. And these things sound to us retail folks sounds like pretty boring. Okay, so I'm improving the the collateral efficiency of big tier 1 banks, but that all ends up translating into what we pay, because their inefficiencies end up being fees for us, the users. So this does have actually a downstream effect.
Yeah, tell me about it. We talk about big banks and fees all the time on the channel. No, Shaul, this has been great, man. It's been so amazing to have the opportunity to meet you and learn more about Canton and learn more about you, really. And I'm just happy to have had the opportunity, man. This has been a great interview. And
it's a pleasure. Anytime.
Yeah, and I think Mike's back with us here.
Oh, I've been in the background just running the chats and doing the background stuff.
Yeah, so what I'm most interested in doing is seeing if I can set up a validator node. That would be pretty cool, man.
Yep.
Maybe run it on like Google Cloud or something like that.
Well, we just got approved what you were saying yesterday.
Yeah, I'm pretty sure I got an email about it. So
nice,
we'll see.
Nice. Let us know if you hit any roadblocks. We're always looking at how to improve how to improve it. And I got my cloud code running a validator, so you can always go and ask him how to do it.
Yeah, I was thinking that maybe we would set it all up live on the show. I would prep everything and then set it up live. That'd be pretty cool.
Nice, that would be cool.
Yeah, people would like that. So, Mike, what else is on the agenda?
No, I mean that's pretty much it. We got a DeFi Don coming up here in a couple of minutes. He's going to be doing entry-level DeFi education from DeFi University, and after that will be Jeff, and Jeff is going to be talking about what has he got coming up. So he's going to be talking about another early project and potentially airdrop, farming in an airdrop. So we got a whole series of shows coming up, and tonight, if you want to join us for the Red Pill. We're going to be talking about probably something very controversial and and screaming at each other. So it's always a lot of fun. It's a bunch of friends just having drinks and just arguing over stupid stuff. But again, it's we're all friends in the end, and it's just a great place to hang out and just kind of get a couple laughs. But
great.
Go ahead. Sorry.
Oh no, go ahead.
I was just going to say thank you so much for taking the time. I know that you are crazy busy. You've always been so generous with your time. This is your second time on. And I promise I won't bug you for at least another couple of weeks.
It's my pleasure. People don't know we met each other over Twitter, and I think we each had a soft spot for fellow veterans, even though we were different different militaries, but fellow veterans, and so always looking forward to talking again.
Awesome,
Thank
man.
you
I
so
appreciate it. Thank you so much, man.
Well, until next time, Veteran Crypto out.
Awesome.